Here we are on the Euro New Zealand, and we have a head and shoulders that's just set up, and I've actually waited for a break of this structure level. Now what I'm just going to do first of all is just talk you through the trade itself. Let's remove those. Okay, so we're here on the Euro New Zealand, so I'm just going to go to the 60-minute time frame on this one and just show you where we're at. And basically all we're doing here is we're putting some tweezer tops, coming back down into the structure zone, effectively double bottoming here, although it's not a double bottom that I would be interested in. And so you can see here on the hourly we've got those tweezer tops, we've got indecision candles, indicating just based off the candles and coming back down into structure that we could see a little pop to the upside. So when I drop down to the 5 range, and today there's not much in terms of structure, so this is a range bar day for me, I look to see where we could potentially get involved in a little pop. And here we have a 3-point move, then we had a outside return, and then we made a new structure low, so we was in trend. We came up, we retested this point, we came down, and then we made a new high, an initial structure high, this, okay? And so we didn't violate this level, and we've made an initial structure high. So if I'm reading price action correctly, and this is the setup for a head and shoulders pattern, then the first thing I look for is that, well, we do need to be oversold on the left shoulder. That's just one of my requirements for a head and shoulder. It needs to happen after a rally, and you can see here that there's a rally based on the 5 range, and I was looking at getting involved here actually on this higher high, higher close candle, but what I wanted to do was just wait for a bit more confirmation. So I waited for us to make an initial structure high, and remember that this was the previous outside return. Then we made a new low, we came up to retest, a pullback, and then up to here. Okay, so initial structure high, so this is the new high, so now it's given me the opportunity to get long. This is an aggressive long because I've not waited for a higher high, higher close, but what I'm looking at is the market coming down, 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 up and up, and I'll be looking for the completion of an AB equals CD pattern. And we can even do that again. Up to this level, and if I just bring my orders back on, I'm looking at targets being taken at the top of this structure level here. Let me just put that back on. So I'm not playing for any extension here. For me, the start of this pole is here, and we could see a retracement up to this level, but this is just going to be a 1 in 1 out for me. So in terms of the risk, again, quite an aggressive trade because I've not waited for the higher high, higher close. I did get it here, but all I simply did was just wait for a higher high above structure and then aggressively bought it on the retracement. And if we come within a couple of pips of targets, I will be taking them. I'll be moving to break even, should I say. So 10 pips of risk, and I did ensure that my stop was underneath this swing low here, because based on this current setup I would not expect it to come lower than this point. And in terms of reward, we could be looking for 17 pips, so not quite a 2 to 1, 1.5 to 1, especially once you include the spread. I'll come back to this in a few minutes and see whether or not we can push a little higher and hopefully move my stop up a little bit and to break even, so that this is a risk-free trade. Okay, I've just resumed the video because we've had a bit of a spike, and we came back down to retest that level as we were heading towards target. So I'll just resume the video to see if we can just pop pop up there, should I say, to hit targets, or whether or not we're going to come down and hit our stop. It's quite good to see. I mean, this is moving a little bit erratically, a little bit unpredictable, but it is nice to see that we came back down to retest the structure level. We actually put in a higher high here. But no matter what happens here, we've got a very nice risk reward. We've got a valid trading opportunity. It would be nice just to see this rallying up and hit those targets. Let's just give it a minute, see what happens. Move these green targets out of the way, just so we can see what price action is doing. It's sometimes fun watching these markets, other times it's not. This. Okay, pushing up, 15 pips up now, so come within 2 pips of target. So what I'm just going to do here is I'm going to move just 1 pip past break even. And so if the market does turn at this point and stop me out, well, I get back the cost of the trade. Just hoping that we can push up here a few more pips to retest those highs. But no matter what happens here, this is now going to be a break-even trade at minimum. So worst case scenario is I'm out for 0. Best case scenario is I'm out for plus 17. And this will be a nice second time this morning that I've taken a head and shoulders on the range bar, and it'll be a nice winner if it comes off. I banked 19 pips earlier on the Euro Aussie. Happened in less than 3 minutes, that trade. Very, very similar setup to this. Okay, I paused it for a moment. I didn't want this video to be too long, and we had a bit of a pullback, and once again we're pushing up now 3 pips from targets, hoping that we can just break this little level of structure and just push up those last few pips. It's always nice to capture the profits being hit live on the video, and while sometimes it's not great sat in front of the computer just watching the charge on these lower time frames, if you're day trading on the range bar charts as well, it's a necessity, because within 10 minutes really of me getting in this trade, we're almost at profits, and I needed to move to break even. And it's also good to see how the market moves. I mean, when you do your backtesting, you will get to see it, but really you're focusing on the trade itself and not really looking at how and why the market is moving. And typically when we come to a structure level, you will see it hold and there'll be some rejection before it eventually breaks through or gets rejected, and to see that in real time is quite good. But when you're doing your back testing, you don't get to see that in real time. What you do is scroll across one candle at a time, and if you're on the hourly, you know, you can scroll 5 or 6 candles within a few seconds. Well, those 5 or 6 candles would have taken 5 or 6 hours, so it's always good to watch it like this. Okay, and we're back for the last part of the video, and as you can see, price action has now rallied up to hit would-be targets. However, I was stopped out for break even, and it's my own fault really. Any trades under 20 pips, especially on the 5 range, when we come close to targets, I should have kept my stop back a few pips. This has happened to me multiple times. A little bit of poor judgment, if I'm dead honest with you. I should have kept my stop. I should have moved my stop up, there's no doubt about it, but I should have kept it a few pips underneath break even, because this has happened to me multiple times, and yeah, so anyway, the trade went on to win. Good example of it winning, good example of how I approached the trade and why, and obviously the trade won. But for me, it was stopped out for break even.